Good evening. I'm your anchor at AI Capital Brief. Tonight, we turn our spotlight to XRP, a longtime favorite in the crypto landscape, now again under the microscope. Where could it go from here? Could it slump toward the low end of expectations, maybe around 30 cents? Or is there a real shot at $10 or beyond? Let's examine both scenarios. What's working for XRP and what could drag it down? First, let's consider the skeptic's view. Despite recent legal wins and market optimism, XRP still faces serious structural and market-wide risks, volatility, and broad crypto weakness. Like many cryptocurrencies, XRP remains vulnerable to macroeconomic headwinds. When risk assets sour, altcoins often take a disproportionate hit. Recent drops across the crypto market, including washouts affecting even major tokens, signal that XRP isn't immune. Liquidity and demand uncertainty. While XRP once thrived with clarity around its use case in payments and cross-border transfers, renewed institutional demand isn't assured. If liquidity dries up, even regulatory clarity might not be enough to support lofty valuations. Competition within crypto and traditional finance. XRP competes not only with other cryptocurrencies, but with emerging digital asset models, stablecoins, and payment infrastructure upgrades globally. If newer, more scalable solutions take precedence, or regulatory frameworks shift, XRP's edge may erode. Potential overvaluation and long-term adoption risk. A $10 price implies a massive leap from current levels. If adoption by financial institutions, corporates, or consumers doesn't scale accordingly, or if market cycles turn harsh, valuations could deflate sharply. In a worst-case scenario, prolonged weak demand, macroeconomic headwinds, regulatory hurdles elsewhere in crypto, XRP could drift toward conservative valuations, possibly reverting to a baseline level around 30 cents to $1 range, rather than reaching speculative highs. Now the bullish argument. There are a number of compelling structural developments and catalysts that could propel XRP much higher. Regulatory clarity and legal closure. In August 2025, the long-running legal battle between Ripple Labs and the U.S. Securities and Exchange Commission officially ended, with appeals dismissed. That removed a significant overhang that had kept many institutional investors on the sidelines. Institutional interest and investment into Ripple ecosystem. Recently, Ripple secured a major $500 million strategic investment round, led by major firms including Citadel Securities and Fortress Investment Group. That values Ripple at about $40 billion and signals confidence in its long-term strategy, including broader adoption of XRP and related infrastructure such as stablecoins and payment rails. Real-world utility and XRPL architecture advantages. The token resides on the XRP ledger, which offers transaction confirmation in roughly 3 to 5 seconds, ultra-low fees, and high energy efficiency, advantages over traditional blockchain networks, making it attractive for cross-border payments and institutional use. Favorable supply-demand dynamics. With regulatory uncertainty resolved and institutional participation increasing, demand could outpace supply or unlock large demand spikes, especially if global corporates or financial institutions begin integrating XRP for remittance or treasury services. Some analysts have suggested long-term targets much higher than current levels, reflecting that structural potential. Possibility of institutional vehicles and macro tailwinds. As the broader crypto and fintech space stabilizes, combined with favorable regulatory environments and rising acceptance of digital asset infrastructure, XRP could benefit from capital flows previously reserved for traditional assets. If even a fraction of global capital rotates toward XRP, a price near $10 becomes structurally defensible over several years. Here's the key takeaway. XRP sits at a crossroads between two very different potential paths. If structural adoption, institutional backing, and real-world use grow, backed by Ripple's funding, XRPL's operational strengths, and a favorable macro backdrop, we could be looking at a multi-year climb that pushes XRP toward $10 or higher. But if demand remains tepid, if competition or macro headwinds prevail, or global crypto sentiment cycles lower, XRP could just as easily drift down to conservative or modest valuations well below its recent highs. For investors, that calls for a scenario-based, balanced approach. Consider XRP's position a long-term opportunity, but treat valuations above $5 to $10 as conditional on adoption, infrastructure build-out, and external factors beyond speculative momentum. Now we will zero in on a potentially historic inflection point for XRP, the arrival of a new wave of exchange-traded funds tied to XRP. Depending on how capital flows and adoption unfold, this moment could reshape supply, demand, and valuation for many years. In just the past few weeks, a flood of XRP-linked ETFs have launched or gained approval. Canary Capital's Spot XRP ETF debuted mid-November with approximately $58 million in first-day trading volume, the strongest debut among all 2025 crypto ETFs so far. Within 72 hours, combined inflows across early ETFs reportedly pushed assets under management into the hundreds of millions, a clear sign institutional and retail investors are lining up. Additional ETFs from major names, including Bitwise, Franklin Templeton, Grayscale, 21 Shares, and CoinShares, are either already live or awaiting final SEC approval. Some of these use cases are spot-backed, while others are futures or leveraged ETFs, giving different risk/return profiles. In short, access to XRP for traditional financial investors, pension funds, endowments, wealth managers, is now far easier and more mainstream than ever before. The arrival of widespread ETFs brings structural tailwinds, demand shock, and scarcity pressure. As ETFs accumulate XRP, they absorb supply off the market. Tokens get locked into fund vaults, rather than circulating on exchanges. This reduces available supply and can tighten float. Institutional capital flows. With large asset managers backing XRP, capital once unable or unwilling to touch crypto may begin allocating to it. Even modest allocations from pension funds or endowments could represent multiples of existing demand. Broader market legitimacy. ETFs add regulatory and institutional legitimacy. For conservative investors or funds with compliance requirements, ETFs offer a regulated, custodial way to gain exposure, lowering friction compared to direct holdings. That expands the potential buyer base significantly. Easier on-ramps for retail and advisors. Retail investors, financial advisors, wealth managers, all can access XRP via traditional brokerage platforms. That democratizes participation and could expand long-term demand. Potential price multiples versus traditional crypto demand models. If institutional allocations accumulate over quarters or years and adoption grows concurrently, then XRP's valuation could decouple from short-term volatility and begin to reflect long-term utility, scarcity, and network effects. For many analysts and proponents, this combination, ETF-driven demand plus structural adoption plus scarcity, creates conditions where a major price increase becomes plausible. Some believe this could support multi-year upside, potentially pushing XRP toward values once considered unlikely. Even with ETF momentum, there are important caveats to remember. ETF flows may plateau or reverse. Strong early inflows are encouraging, but demand could taper. If too many holders treat ETFs like trading vehicles rather than long-term storage, selling pressure may arise. Supply pressure from unlocks or large holders. If large holders or whales liquidate holdings, or if new supply enters circulation, increased supply could counteract ETF-driven scarcity. Competition from other assets or cryptos. Just because capital flows into ETFs doesn't guarantee all that money stays in XRP. Investors may rotate between cryptos, other digital asset ETFs, or traditional assets depending on macro conditions, regulatory changes, or alternative opportunities. Macro, regulatory, or market-wide risks. Interest rate changes, regulatory crackdowns, economic downturns, all could reduce risk asset appetite, hit crypto broadly, and disproportionately affect altcoins like XRP. At AI Capital Brief, we see the new wave of XRP ETFs as one of the most significant developments for XRP in years. This isn't just another token rally. It's structural, opening the gates for real capital, institutional comfort, and long-duration holders. If even a fraction of institutional capital allocates to XRP over the coming 12 to 36 months, combined with steady adoption and supply constraint, the potential upside could be large. But equally, this is not a guaranteed path to riches. Investors must monitor ETF flows, exchange supply, regulatory signals, and usage data. For now, ETFs have tilted the risk/return equation in favor of upside potential, but only time, adoption, and demand will decide whether XRP becomes a mainstream digital asset foundation or remains a high-volatility speculative play. Probable trajectory for XRP price, what the path forward likely looks like. Now, let's move from theory and catalysts to the real question investors care about most. Where does XRP realistically go from here? While no forecast is guaranteed, the most rational approach is not to view XRP as a single price prediction, but as a probability curve shaped by adoption, ETF flows, market cycles, and investor psychology. Near-term trajectory. In the near term, XRP remains highly sensitive to sentiment, ETF inflows, and broader crypto market momentum. Volatility should be expected. If ETF accumulation continues at a steady pace and broader crypto sentiment remains constructive, XRP could methodically grind higher, testing intermediate resistance levels as capital continues to rotate into assets with expanding institutional narratives. However, if ETF enthusiasm cools or broader markets experience risk-off pressure, XRP could easily revisit lower consolidation zones as traders take profits and liquidity thins. This phase is best characterized as price discovery under structural transition. Translation: choppy, headline-driven, but directionally biased by flows. Midterm trajectory. This is where the structural story truly begins to matter. If XRP ETFs evolve from speculative trading vehicles into long-term institutional holdings, similar to what occurred with gold ETFs in the early 2000s, then XRP begins shifting from a cyclical altcoin into a semi-institutionalized digital asset. Historically, when assets gain institutional permanence, price trajectories tend to move from sharp spikes to longer, more sustained trend channels. In this environment, XRP's most probable trajectory becomes a steady expansion cycle, periods of acceleration, followed by consolidation, then continuation as adoption layers build. This is where sustained utility, payment corridor adoption, and cross-border settlement demand start to matter more than speculation. Long-term trajectory. This is where the real divergence between the 30-cent scenario and the $10 scenario emerges. If XRP gains consistent institutional allocation, expands settlement usage, maintains network relevance, continues ETF-driven supply absorption, then price appreciation begins to reflect not just speculation, but infrastructure valuation. In this case, XRP may begin to behave less like a meme asset and more like a high-beta financial rail token, meaning its valuation is linked to usage, throughput, and monetary velocity rather than pure hype cycles. That environment favors asymmetric upside, where gradual compounding replaces short-lived spikes. The most probable path, neither extreme, but defined by momentum. Instead, probability favors a cyclical expansion pattern, intermittent corrections, higher structural lows over time, periodic speculative surges during market euphoria. XRP's likely evolution is not a straight line to either 30 cents or $10, but a staircase, determined by capital commitment and real-world adoption metrics. The major determinant will be whether demand becomes persistent rather than event-driven. Strategic interpretation for investors. The trajectory isn't about guessing the single price, it's about recognizing the regime shift underway. If ETF flows remain active and institutional commitment deepens, XRP moves into a higher valuation band permanently, even if volatility remains. If flows fade and usage stagnates, the price narrative weakens. But if adoption, capital inflows, and infrastructure relevance align, XRP's trajectory leans toward expansion rather than decay. And in markets, trajectory matters more than any single number. At this moment, XRP stands not at a conclusion, but at a defining chapter. The coming quarters will determine whether it settles back into cyclical obscurity or elevates into an institutionalized asset class with lasting relevance. And as always here at AI Capital Brief, we will remain focused not on noise, but on trajectory, structure, and strategic reality. Because in the markets, fortune does not follow emotion. It follows momentum, flow, and positioning. And XRP's next move will be written not by speculation alone, but by capital. Thank you for joining us. Until next time, stay focused, stay informed, and stay ahead with AI Capital Brief.